Viewers. In this video, I'll be going over the Dow Jones ETF ticker symbol DIA. Today, the Dow Jones is down about 65 basis points, and we can see that in the 1-hour chart that we are oversold, so we may find some temporary support at this level, but I do believe we may be heading down further. As we can see on the 4-hour MACD is pointing straight down, and I have a feeling we may go negative on the MACD. And for the 1-hour chart, there's some hope for the bulls. The 9-day moving average acts as a support, and we are currently at a level where past resistance is now support. So this resistance or now support, we are currently at that level, and this could act as a decent support, but overall I do believe that we may head lower. And as for the resistance level or the ceiling, the next target would be the all-time high of last year, and we're not far from it. And if we were to break our support, which is, I would say, where we are right now, the next support would be this 18-day moving average, which is not too far off. So if we were to, say, drop to that level, that price movement is about 1.7% down, and if we were to move up, that price level or price movement of about 2.8%. And on to the next module. So what we have here is the current trend, and I will be comparing with this trend. This trend dates back to April 25th to July 20th, 2007. I'll point out why these two charts are similar. So let's start on the beginning of the trend. What we see here is an upward trend for several days or several weeks, and we have a W shape forming, and I'll make this red, touching the bottom Bollinger Band, and it touches the bottom Bollinger Band once more, and for this in between it touches the middle Bollinger Band, and we'll make this blue. After touching the bottom Bollinger Band twice, it reaches up to the upper Bollinger Band. If you're not familiar with Bollinger Band, it's a tool used to measure price level and volatility. And what we have here is we may be reverting back to the mean or the middle Bollinger Band right here. And I'll make this purple, so we may touch on that level soon. And as for the chart that we're comparing it to or in question, we do see an upward trend for several days or several weeks. And we do see a W-shaped pattern here as well. And in the previous chart or in the current chart, we had two red circles and one in the middle, which was a blue circle, and then after that pattern shaped out, we have the candlestick touching the upper Bollinger Band, and you could say that it may look like it's reverting back to the mean, touching the middle Bollinger Band, similar to what we see in the current trend. So what we have here is 1, 2, 3, 4, 5, 6 points, 1, 2, 3, 4, 5, 6 points that are identical. So there's reason to believe that identical trends or identical points tend to output the same forecast. So let's check the forecast model. Here I'll go day by day where Dow Jones will head to, or DIA will head to in the next coming days. Currently at 0 days, 1 day, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, 7 days out. So again, the trend that we took a look at was April 25th, 2007 to July 20th, 2007. And at that time, it was down about 4.3%. That is a drastic drop, but it's only a model. So I'll compare the model. What we have in this line is our current trend, and I'll compare it to the trend that we just took a look at. So you could say that this model aligns up fairly well. And that is all. So if you enjoy this content, feel free to like, subscribe, and thank you for watching.